Is the history of a stock a good indicator that you've found a good dividend stock? I'm talking about the King of Kings, the Cyrus the Great. Do we have a dividend stock that is that, or do we just have King Charles, who's kind of the remnants of a bygone era? Today, I'm diving into Fortis, and the history of Fortis is quite good, but does it hold true today? So, what is Fortis all about? Fortis has 50 years of paying dividends and 50 years of consecutive dividend increases. Well, that's pretty good. Fortis is also a lead gas and electric utility company in Canada, US, and the Caribbean. Okay, so fairly large. So, let's talk about the dividend. The payout ratio is 75 to 80%, considered sustainable due to their regulated operation, but may prove limiting in the future. Payout ratios to be sustainable and potentially have growth should be under 60%. So, regulated utility services means consistent cash flow even during economic downturns. This is ensuring consistent dividend payments. So, that's a pretty big positive when you're looking for a dividend. What are the positives of Fortis? So Fortis infrastructure investments means future profits. And so they have lots of infrastructure investments, but also leads to large debt and potential risk with high interest. Bank of Canada just recently lowered the interest rate. So it looks like interest rates are going to be going down instead of up. So at the current moment, it seems like less of a risk than it would have been maybe a couple of years ago. So, is Fortis a growth stock or is it a high yield stock? Typically, Fortis would be considered a high yield stock as increases would be fairly marginal. For income investors, this could be considered more of a safe stock when building your portfolio for passive income. For growth, Fortis's stock price has been relatively flat for about 5 years, and the dividend growth is very modest. So, really, no capital appreciation. So, just a few more stats about Fortis that you may want to consider if you're looking at adding this stock to your portfolio. Price per earning is 18 to 20 and is in line with the utility sector, suggesting it is currently a fair price. Price per book 1.5 to 2.0, which is reasonable for a utility company with a large asset base and that is currently at a fair price. Debt to equity. Debt to equity is 1.5 to 2.5, which is relatively high, largely due to capital investments and risky if interest rates rise. Cash flow makes it manageable. So their strong cash flow position does help them to override some of these risks. Return on investment. So the return on investment is between 8 and 10%, which indicates stability in line with the utility sector. Again, returns are a priority over growth. So again, the positives for Fortis are strong track record with consistent dividends and increases and strong cash flow. Now the red flags are high debt levels and sensitive to interest rate increases, limited capital growth. So if they were wanting to grow right now, it would put them in a very debt heavy situation. And to be honest, it's probably a little high for me right now. So what's my conclusion? Fortis is more for income investors with small increases in dividends and little or no increase in the stock price. If I find this stock at a low, I'm probably going to buy it. With that being said, I just want to say I'm not an advisor. So if you're wanting to use any of this information to help you grow your portfolio and to use this stock, then you should definitely do your own research to make sure it suits your needs and or check with a professional advisor to see if this is the right choice for your portfolio. And to finish it off, I use WealthSimple because it's easy to use and I don't pay fees. And if you're new and you're looking for an online broker, check the link below. You and I both get the same reward, and I use it WealthSimple because, well, it's easy to use and I don't pay fees. They're not a sponsor, but I do like using them, so I do like to pass that on for anybody who is new and looking for something that is going to kind of treat them well. There you go. So that's it for today. Thanks for joining me. We'll see you for my next video.